Let's get straight to our first guest, David Friedberg, VC, on this. David, thanks for being with us. I mean, wild 24 hours. It turns out that the white knight, the so-called JP Morgan, the Warren Buffett of crypto, has turned out to be just another over-leveraged crypto bro. What does that mean for the industry? Walk us through how this all plays out.
Yeah, I mean, that's the current party line, and I think folks are really anxious to dig in to what really got us to this point. How much of this was a failure of diligence on the part of the investors? How much of it was a bad actor making kind of malicious decisions and misrepresenting what he thought was going to happen and misrepresenting to his clients how he behaved and how they operated? So there's still a lot to uncover. The folks I've spoken to believe that this is really more of a kind of isolated bad actor incident. But there is obviously a broader question that everyone's asking now, which is, where are the regulators? And so much of the behavior and the actions that may have led to this likely took place offshore. And a lot of the offshore regulators then allowed kind of isolated local regulation that ultimately spilled over into this kind of international problem. And so there is certainly going to be much more concerted, I think, international cross-border efforts to try and regulate now. And I think a lot of people inside the industry that want to see the industry succeed are saying that that's exactly what they want to see happen, is really constructive regulation that's cross-border, that allows this industry to thrive and grow from here.
But this is such a failure of regulation. When you ask the question, where are the regulators? Well, they're in Washington talking to Sam Bankman-Fried. He has really been the face of the institutional crypto sphere. He's the one talking to regulators. So his downfall, bad actors maybe, but I think the key here is over leverage in the system is just absolutely rampant. I don't know if you can trust that CZ and Binance aren't over leveraged as well. So, I mean, more than that, it has to go beyond regulation, right, David?
Yeah, I mean, I think that there's a real question on how these exchanges operate. Look, I mean, regulated marketplaces, regulated markets, regulated exchanges in the U.S. under the SEC, there are really strict controls on what the marketplace, the exchange can and cannot do. And the dealings that happen between the principals at some of these exchanges and some of the, call it, market-making vehicles that they had set up off exchange seem to have been a big motivator here. And under U.S. regulation, that would likely not have been allowed. And so, again, the leverage is always, give people an incentive, and you'll see them act on it. But I think that the lack of controls allowed this incentive to bloom. So, very likely, I think a lot of folks that are institutional in nature, thoughtful in nature, long-term investors in nature, are going to sit out this crypto marketplace until they see the right transparency into what's going on and the right regulation take place.